Hey, my name is James Nicholson and welcome to my YouTube channel. Could mortgage rates, could interest rates, the Bank of England rate I'm talking to, just to be clear, could that be cut 3 times this year? Well, we've already had one of those cuts. Could we be in store for 2 more cuts? Well, lots of people, after what's happened in the last week with the stock market in America, with the Americans now likely to cut interest rates in September, the expectation is that the Bank of England might now be on forecast to cut interest rates a further 2 times. Now, this is going to be really good news for those people that have mortgages or are even looking to get onto the property ladder, because right now affordability is stretched. And right now, it used to be that you'd have 28% of your take-home pay went towards your mortgage payments. It's now up to 37%. So how do we improve that? Well, if we reduce interest rates, that means monthly payments will be less. If house prices don't go roaring up and they just stay fairly slowly going up or just flat, as they kind of are if you take into account for inflation, then that affordability will improve. So before we jump into this, as always, if you haven't done it already, do make sure you subscribe to the channel over there and hit that bell notification. We're on the way to 28,000 subscribers. We got to 25, 26 and 27 came very, very quickly. Now we're on the way to 28. So do subscribe. And while you're here, smash like, tickle like, hit that like button, guys. That really helps me with the YouTube algorithm. And that's what we want. We want more views on the channel. So I appreciate everyone that does that. So, John Charco and other places. John Charco is one of the biggest mortgage brokerages in the UK. It's not a guy. Well, maybe it was a guy. Or maybe it is a guy. But the company is John Charco. They are a huge mortgage broker. They're in with lots of the big estate agents. So they get a lot of business through those guys. They're saying that they believe that we'll have 2 interest rate cuts coming in 2024. Now, that's good news. And over the last week or so last week we went from 5%, the Bank of England rate went from 5.25% down to 5%. Now, the expectation after that was that mortgage rates, the rate that you pay, I pay, those rates, a lot of people didn't think that they would come down anymore. They have. They've still continued to drop. In fact, yesterday's video, I talked about 5 lenders that have a sub 4% interest rate. So a lot of lenders are below 4% now. Now, the reason for that isn't necessarily to do with the Bank of England cut. It's more to do with the fact that the market is slower. It's picking up a little bit, but it is generally slower than it was, particularly against more normal times. 2019 is 25% down at the moment. And this happened in December last year. So in December last year, the market started to slow down. The mortgage lenders started to cut rates. They cut their margins and they cut their rates in order to get more business. Now, that did stimulate the market. In January, February and March this year, the year started off pretty good. Then when the market got busy, they started to creep their rates back up ever so slowly because they thought, oh, it's getting busier now. Maybe we can get a bit more margin here. As they did that, what happened was the market started to slow down. So in May and June and July, the market was significantly slower. So around June time, they started to cut rates again. Now, the rate that they also borrow at, the bigger banks, so Barclays, HSBC, Santander, they borrow from bigger banks like JP Morgan Chase and banks like that. The rate that they borrow at did actually drop in the summer as well, giving them an opportunity to cut mortgage rates for people like us, which they did. So they have done, and rates have been gradually going back down again. The market is getting slightly busier again because of that, which is what they wanted to do. They wanted to stimulate the market and get people moving, because the problem that they had was a lot of people just decided to sit the market out. There was a few reasons. One was the election. That's done. But some people wanted to sit out the election and just see who was going to get in power. What are the housing policies going to be? Are there going to be these schemes? Let's think about it. If you're a first-time buyer, you might as well wait, because let's just say Labour got in and then they did some sort of great scheme for you guys to help you get on the ladder. You wouldn't want to miss out on that. Of course you wouldn't, right? So people slowed down because of that. That's done. Next was people wanted to wait until the Bank of England cut rates. No one wants to buy a property at the peak price, which we're pretty much at now, and at the peak interest rates that we've had for about 20 years. People don't want to do both of those things. So a lot of people wanted to wait till the Bank of England started to cut rates. That happened last week. That stimulated the market a little bit more. But it's not enough. And so banks are fighting over our business. Now, if the Bank of England do look at this and they do look at what's going on in America. So in America, the expectations are potentially America could go into recession. The jobs figures are not looking as good. Some of the earnings reports out of some of the big companies are not what we expect. Some big companies are saying the American economy could go into a recession, while others are saying this is rubbish. We're doing really, really well. We see a strong end to 2024. Now, if the markets do get spooked and we do start moving towards a recession in America, the Federal Reserve will cut interest rates fast. And they are trying to get America to have a soft landing. They're trying to bring down the rate slowly. They're pretty much guaranteed now the rates are going to be cut in September. We were expecting the Fed to cut rates by 0.25, the same as Bank of England. But now the expectation is more baked in that it will be 0.5%. This is why there's a chance we'll have 2 more rate cuts. If they cut by 0.5%, they're now higher than us because we've gone to 5%. If they cut by 0.5%, they will be lower interest rate wise than us. That gives the Bank of England the ability to cut rates and not impact the cost of the pound. That's what they're looking at as well. They don't want the pound to be devalued too much because we import stuff, that will get more expensive, inflation will go up again. So if the Fed cut by 0.5%, that gives us the ability to do that cut. If the Fed then cut again in November, we've got the ability to cut again. This is really, really reliant on how the UK and how the American economy does. The American economy potentially might survive. There's an election coming up. Maybe they'll fudge some numbers and keep those keep that official recession kicked out until January or February of next year. We'll see how it goes. But I'm pretty confident the Fed is going to cut. That gives us the ability to cut at least once more this year without impacting the pound too much. But a lot of people are starting to believe that we might have 2 more cuts in 2024, which will be good for your mortgage, for my mortgage, and that will stimulate house prices again. I mean, it will get people that are sitting on the sidelines. They've been waiting to see if anything happens with house prices. They've been waiting to see if interest rates are going to come down. If they see that happening and banks start dropping even further, you'll see quite a busy market in 2024. Let me know your thoughts. Do you think we've got 2 more cuts? Do you think we've got 1 more cut? Or do you think we've got no more cuts from the Bank of England this year? Do comment below. Do smash like. Do subscribe. Do check out all the other content on my channel, including this video right here.